Listen up because we're about to talk about something pretty exciting. The Santa Claus Rally. It's this cool thing that happens in the stock market at the end of the year. And you better believe it's something every investor watches out for. Basically, stock prices tend to go up during the last week of December and into the first 2 trading days of the new year. It's like a little gift from the market gods. Now don't get me wrong, this isn't about some magical elf controlling things. But there are some pretty interesting reasons why this happens. And knowing those reasons can help you make some smart moves with your money. So buckle up, because we're going to break down everything you need to know about the Santa Claus Rally. Alright, so when exactly does this market magic happen? Mark your calendars because the Santa Claus Rally usually takes place during the last 5 trading days of December and the first 2 trading days of January. That's right, it's a 7-day stretch where the market tends to get a little extra jolly. Why this specific time? Well, there are a few theories about that, which we'll get into later. But just know that historically, this period has been pretty good for investors. Of course, past performance isn't a guarantee of future returns, but it's definitely something to keep in mind as the year comes to a close. Now you might be wondering, Jim, why should I care about this Santa Claus Rally thing? Well, my friend, it's all about potential profits. You see, when stock prices go up, investors who own those stocks make money. And historically, the Santa Claus Rally has been a pretty reliable period for market gains. Of course, there are no guarantees in the market, but the Santa Claus Rally is a phenomenon that's been observed for decades. Some investors even use it as an opportunity to adjust their portfolios or make some strategic moves. So, while it's not a sure thing, it's definitely something worth paying attention to. So what's the deal with this rally? Why does it happen? Well, there are a few different theories out there. One popular idea is that it's all about investor psychology. People are generally in a good mood during the holidays, feeling optimistic and generous. That positive sentiment can spill over into the market, leading to increased buying and higher prices. Another theory is that it has to do with institutional investors. These big players often wrap up their trading for the year in December, which can reduce selling pressure in the market. And when there are fewer sellers, prices tend to go up. Whatever the reason, the Santa Claus Rally is a fascinating phenomenon that reminds us that the market is influenced by more than just numbers and data. It's also shaped by human emotions, seasonal trends, and maybe even a little bit of holiday magic.